Hey guys, welcome back to my channel, McNallie Money, home of all things stock investment and personal finance related. Today we're going to be taking a look at a company that's involved in the home building space, trades under the ticker symbol TOL. The name of the company is Toll Brothers Inc., and this is one that I've been following for some time now. They actually have earnings coming out later this month, so I thought it'd be a great time to take a deep dive into this company and see what we can come up with. Before we get into the video, please take a second to like and subscribe to the channel if you haven't already. Also, please feel free to leave any recommendations on companies you want me to look into in the comments section below. And whichever one gets the most likes, I'll be sure to do a video about in the coming weeks. Without further ado, let's jump into the video and learn about Toll Brothers. Okay guys, so as promised, today we're going to be talking about Toll Brothers Inc., which is a home builder based out of the US. Now this is a stock that I've been following for a while. As many of you know, I'm also involved with real estate, so I have a soft spot in my heart for home builders and construction companies like this. So I've actually been watching this one for a while. I haven't pulled the trigger yet. I wish I did, looking back now at its run up over the last maybe 13 months. And the other thing that kind of inspired me to take a second look at this stock is a recent video I did on Open Door, which is a real estate company. So they're very closely related in terms of home builders and then those homes need sold. So I wanted to do a deep dive into Toll Brothers today and hopefully open you guys' eyes to what I think is a very successful developer, home builder, and we'll talk about some of the other areas they're expanding into as well. So if we pull up a chart here, you can see they're just north of $56. If we look at a 1 month, they were actually trading in the mid 40s here just in mid-January. So they've had a good little run just in the last 30 days. If we look at a 6 month, you can see here they were actually in the mid 30s. So this would have been a great entry point, I think, in August of 2020. However, like I said, I have not entered any position on this stock. And what gets really exciting is if you pull up a 1 year and you look right after the COVID pandemic here, so mid-March of 2020, obviously, there was a lot of uncertainty in the market. We didn't know how bad this would get. We weren't familiar with work from home at that time. You can see this stock was trading under 16 bucks. So it's run up almost 4x from that. And that's why I was so excited to do this video. I think this company still has a lot of runway left ahead of them. And I think they're executing at a very high level. Now, in terms of market cap, you can see they're just under $7 billion. So they definitely are a smaller company compared to some of the big tech names that maybe you're more familiar with. This is a company that's not talked about a ton in the news or media, and they do actually pay a dividend as well, so it's less than 1%. It's always nice to have a company that pays a little bit of dividend while you wait. Now if we scroll down the page a little bit here, I did want to point out their earnings history over the last couple quarters. So they've had some big beats here. Earnings per share of $1.60 in their most recent quarter, which was Q4 of 2020. So we're going to look at a few different presentation decks. It's important to see that they've had some pretty good earnings history as of recently. And then the other nice thing, you can see here Q4 was massive for them, and we're going to talk about their backlog and their home starts and stuff like that. But they had a phenomenal end to 2020, and you can see on an annual basis here, even despite the COVID pandemic, they were actually able to eke out a pretty good year, which was pretty much in line with 2018 or 2019, despite that very slow start in Q1 and Q2. So that was encouraging for me to see, and honestly, I think they're going to be able to build on that exponentially in 2021, 2022. So to kick the video off, I wanted to give just a high-level intro as to what Toll Brothers does as a company and what they're involved with. You can see here they develop very high-end, really nice homes. They also have a wide variety of other offerings, and we'll talk about those in a second, but I wanted to open this up just to give you guys a frame of reference in terms of the quality that they produce. Now, on their website, they talk about what Toll Brothers actually does. So they're an award-winning Fortune 500 company. They were founded in 1967, and they're currently the nation's leading builder of luxury homes. Now, they cite unwavering commitment to quality and customer service as the reason they've been able to establish this track record and gain this notoriety, and I definitely believe them based on what I've seen in terms of this company's analysis and breakdown. They currently operate in 24 states nationwide in a variety of different communities and housing types. They're listed on the New York Stock Exchange under the ticker TOL, and for 6 years in a row, they've been ranked the #1 home builder worldwide by Fortune magazine. They were also honored as Builder of the Year by Builder magazine, and they were twice named National Builder of the Year by Professional Builder magazine. So their work speaks for itself. They're a very well-run company, and they produce very beautiful homes as an end product. Now, if we scroll down the page just slightly, you can see here the different divisions that they operate in. So they have adult living, apartment living, campus living, so universities or colleges, and then city living or single family homes. Now, this article here actually talks about their investor story. So the top paragraph is very similar to what we just read. It actually lists out the 24 states that they're active in, but this is the important thing I wanted to call your attention to on this page. So you can see here they really describe the variety or the depth of products that they offer. So single family, detached homes, attached homes, master plan, resort style, golf, low urban, mid, high residential communities, and this is primarily on land that they develop, own, and improve themselves. Now, in addition to the home building, Toll Brothers also operates its own architectural, engineering, mortgage, title, land development, land sale, golf course development, and management. So they're very diversified, and they actually take this entire vertical and they own it end to end, which allows them to really squeeze profit margins and realize synergies between different business units. In addition to all of that, Toll Brothers also operates its own alarm monitoring company and a variety of low voltage options for homeowners when they're out of town. The other nice thing, which I found out during this research and I didn't know previously, was they have their own lumber distribution, component assembly, and manufacturing operations. So they actually create the products themselves, they mill the lumber, they build the trusses, they then take it out to the land which they own, build the properties, sell it, and they handle the whole transaction end to end, which I think is very smart and really cool. Now this slide just quickly talks about the senior management team. I'm not going to spend a lot of time here. The thing I wanted to point out, Douglas Yearley is the CEO of this company, and he actually joined in 1990, and he's been working there for over 30 years. So you can see here he's worked his way up through the rank. He's been an officer, vice president, senior VP, regional president, and I think this is really cool, especially in this type of industry where experience matters so much and there's so much built on relationships. I think it's very important that senior leaders learn the business from the ground up and they get their hands dirty. So this was good to see that this guy's been around, he knows what he's doing, and obviously he sees value in sticking around with this type of company. Now, for those of you who have watched my videos before, you know that I'm big on corporate presentations or investor decks. So we're actually going to look at two here. The annual report, which is the most current, and then we're also going to talk about Q4 of 2020 because I think there's a lot of value in that deck. That's actually the one that I looked at when I was considering buying this company a few months ago, and I think it's very, very well put together. So in terms of the most recent or the annual report, there's two things I wanted to point out there. So this is the first. This gives a high-level overview of financials and all the numbers. So you can see here they give year-over-year performance since 2012, which is really cool, so you can kind of see the progression of the company. Now you can see here revenue, it definitely wasn't their strongest year. They've actually had stronger years in 2019 and 2018, as we saw in that initial Yahoo Finance slide, but it definitely wasn't their worst. So they actually had revenue of just about $7 billion, net income of $446 million, and average earnings per share of $3.40. The other thing that's interesting here is you can see their share count has actually gone down over the years. So that's nice to see as they consolidate and there's fewer and fewer shares out on the market, which obviously equates to higher earnings per individual share. Strong cash position, so over $1 billion in cash. Inventory is up over $7.6 billion. So that's homes or inventory currently in the pipeline, giving them a total assets of $11 billion. So in terms of total assets, this actually was their strongest year on record, and you can see here it was above 2018 and 2019, despite those challenges early in the year. The other thing I wanted to point out on this slide is the number of homes closed. So you can see here, this was their strongest year in the past 12, with nearly 8,500 homes closed. The other thing that was interesting is the number of homes contracted almost hit 10,000. So this was a substantial increase. You can see here the highest year on record prior was 8,500. So they're up almost 25% from 2019, and we'll talk about that backlog or the number of home starts in more detail as we move through the deck here. But that was very interesting and definitely worth noting. And then you can see obviously more homes in the pipeline, so the value of those homes contracted is also at an all-time high. As we move down here, you can see homes in backlog. So again, this is an all-time record at nearly 8,000 homes in backlog. So when you talk about earning or revenue stability, it's great to see that they have all that in the pipe. So finally, you can see the number of home sites they have. 36,000 are owned, 27,000 are optioned. We'll talk about that later in the video, for a grand total of 63,000 sites, which again is an all-time high for them and is up from 59,000 in 2019. So overall, extremely strong year considering the rocky start, and I think these numbers are going to continue to rise as they now have kind of mastered this pandemic situation, the work from home, and they continue to build on this momentum. The second slide I wanted to show here is just their geographic diversification. So they've actually separated their company into 5 different divisions, being North, Mid-Atlantic, South, Mountain, and Pacific. So the thing that's cool here is, number one, you can see there's still a number of states they haven't touched. Now, I think this is by design. Obviously, the vast majority of population in the US lives along the coastline or in these main states. So I think they've really focused on the areas that matter or that the most populated. But the other thing that's cool is you can see in terms of revenue, they're very well diversified. So it's not like one segment or one area of the country is over-indexed compared to the others. And that's very important as you think of macro trends, migration of people, job markets, natural disasters, global warming. It's not like if one area gets negatively impacted, it's going to hurt their entire company. So you can see here in terms of revenue, very well diversified throughout the 5 regions. Home sites controlled, again, very well split. And then we talked about this a little bit on the last slide, but the number of backlogged homes, so the homes in the pipeline, again, are very well diversified throughout the country. So now we're going to jump into the Q4 investor deck. I think it's really cool how they put in pictures of these homes. As mentioned, I'm a big real estate guy. The homes Toll Brothers create are absolutely beautiful and I love seeing them. And this is really the culmination of all the numbers, information, discussion that we had in this presentation. This is what matters. This is what the end customer sees. This is what they're going into to view and purchase. And I think the end product with these guys is absolutely beautiful. So this slide is an overview of the company. A few things I wanted to point out here. We talked about a lot of the awards or notoriety that they've gained over the last couple of years, so we're not going to spend time there. We talked about the 24 states they operate in, but I did want to point out that within those states, they have multiple markets, so over 50 markets, and they've added 9 new markets since 2018. Now, this company has a strong focus on capital efficiency, which is great for shareholders. So they have a really robust land acquisition strategy, and they're very good at picking and developing properties that are going to appreciate in value in the future, which I think is very important. They have quick turnover and low upfront land costs, so they're good at negotiating and really maximizing the value. Strong buyback program. So we saw those share counts continually declining over the last couple of years, and this is exactly why. This company is actively buying back their own shares, and this is allowing them to really reduce the overall share count, increase earnings per share, and make that dividend a little bit more attractive. So the overall goal is really improving return on equity for shareholders, which is phenomenal to hear. The other thing worth noting, I think, we talked about senior management in terms of their experience. So the average tenure is 16 years. We saw the CEO is over 30, which is great. But the executives and directors actually own over 10% of this company. And I think that speaks volumes about a company of this size. Remember, it's almost $8 billion company. So they own almost $800 million of this company themselves, which means they strongly believe in what they're doing, the value that they're creating, and the overall health of this business. Now this slide, you see another beautiful home here, cool fireplace with a little infinity wall pool. This one talks about the US housing market itself. So I think this is interesting. Now it talks about pre-COVID-19. Obviously the world was very different, but there was a strong support for housing, increasing volumes of new homes, and demand was improving or accelerating in late spring of 2019, which carried over into the initial start of F20. So then came COVID and it really turned everything on its head. It put a pause on literally everything from home showings and sales, real estate, building, construction. There was a significant pause to the entire economy and nobody really knew what was happening. So if we jump back to their chart here, this is exactly what was going on in these months when we saw this company's value absolutely plummet into the low teens because nobody was sure how this pandemic was going to play out, how long it was going to last, and really what the outcome was going to be. So if we jump back now, you can see here, COVID's been around now for over a year. We kind of understand it. We know what's happening. We feel like we have a okay handle on it. So there's now obviously 2 considerations for Toll Brothers moving forward, demand and supply. I think both are working in their favor right now. We're going to talk about this in more detail on the next slide, but essentially obviously what you need to know from a macro standpoint. Population growth is continuing to go up. Millennials are looking to upgrade out of the rental market into the home ownership. There's pent-up demand from people who wanted to build or move prior to the pandemic and then were forced to wait. And also home ownership rates are rising due to historically low interest rates. So from the demand side, there's a number of catalysts I think that are working in their favor. From the supply side, there's still a shortage on inventory and lots. A lot of the large builders have limited capital access, and the median age of existing homes, so homes that are already on the market being not new builds, has increased from 25 to 40 years. So a lot of the houses in the ecosystem, if you aren't necessarily looking to build a new home, are very old, dated, and obviously the cost of renovations has gone up considerably over the years. So this obviously pushes people to maybe entertain the idea of building as opposed to buying a used home. So over and above the supply and demand catalyst, there's also a number of other tailwinds which I think are massive for this company. Number one, we kind of briefly mentioned mortgage rates at an all-time low, and they really don't look to be going up anytime soon. So people can borrow money for cheap, they can take bigger mortgages, and they can build those dream homes. Secondly is this work from home phenomenon due to COVID. So a lot of the population is now working from home. A lot of big corporations have said this is going to be the new norm, and they're going to continue to encourage staff to work from home. So obviously now that people are spending more time in their house, they need more office space, they need more entertainment spaces, and they're willing to invest money that maybe they would have spent on a vacation or trip or something like that into their primary residence. And this bodes extremely well for Toll Brothers because they can tailor or custom build those homes to the exact specifications that the customer wants, giving that customer the perfect kind of sanctuary for living, learning, working, and entertaining in their home. So this slide here talks about a lot of very similar things. Record low interest rates, constrained supply of new homes, millennials moving or starting families. So when you have little kids, my wife and I actually have a 7-month-old, you need to start thinking about multiple bedrooms, home layout, work from home, which we talked about. People are also free to buy houses outside of maybe markets they traditionally work in, which allows them access to maybe cheaper land, which means they can build bigger homes. And they specifically call out customized work from home options, which I think is a great selling point, and I think something they can continue to springboard off into 2021, 2022, things like that. The other thing that's awesome for this company is low unemployment rates among college graduates and those who can buy homes. So although a lot of people are out of work right now, it's a lot of entry-level positions, and it's really the people that are not the target market for this company. Obviously, these houses are, I don't want to say expensive, but they're higher end, and it's not necessarily frontline cashiers, retail workers that are targeted by this company. It's really those college graduates, post-secondary, young professionals that have more disposable income and are really looking to invest in their family's home. So as you can imagine, with all these different catalysts and kind of macro conditions in the market, there's going to be surging demand for these type of homes and this type of company. So you can see here the strong demand kind of began in mid-May. So spring after that initial COVID shock hit the market. Q3 contracts were up 26% and 18% in terms of overall dollars. Q4 continued to snowball, so contracts were up nearly 70% and 63% in dollars, which is their highest total for any quarter in history, which we kind of saw. 2020 backlog was the highest value in history, which we saw in that year-over-year financial slide. And obviously, if you have a high backlog, that means you're going to be off to a strong start in 2021. You can see here their starts were up 48% in the first 6 weeks of 2021. And then ultimately, they're looking to expand into new communities, 10% more communities by the end of fiscal year 2021. So they're getting into more markets as a result of increased demand and increased profitability. So we've talked a lot about who Toll Brothers are, what the company does, and some of the reasons I'm so bullish on this company and industry moving forward. But I wanted to take a second and actually look through some of their finished products or home offerings just to show you guys the kind of quality and the kind of variety that this company produces. So you can see here, these are all the different markets that they serve. So first-time home buyers, active adults, second home, infills, high-res condos, all the way to student housing. So they really span the market pretty nicely. So if we scroll down here, you can see the company is continuing to diversify. If we look back 20 years, 89% of their properties were single-family homes versus only 68% in 2020. You can see big growth here in age qualified, so senior living and attached homes. And I think this is really representative of the demographics and shift in the way people live and where people live as opposed to 20 years ago. Now this video would not be complete if we didn't take a second to actually look through some of the homes that Toll Brothers builds. So you can see here, this is what they call the move up. I'm going to scroll down the page. We don't have to talk about each home, but I wanted you guys to see the kind of quality and the variety of homes that this company produces. So just gorgeous homes. You can see the interior as well matches the exterior. Very open concept, very modern. Here's one in Arizona, California. Here's some of their master plan communities or kind of resort style living. Second home in Nevada. And then here's what they call urban infills. So in addition to all these single family homes, you can see here all the different buildings that they're responsible for as well, which is pretty impressive when you think of the variety in terms of architectural design, construction, and overall layout of these different properties. They're also involved with some urban redevelopment projects, so some big scale condo livings, and then mixed use properties as well. So they could be hotels, commercial, residential, but they're really starting to expand into this region. This is one obviously in Brooklyn, New York. And then high density living. So this could be stuff like student accommodation, college or senior living. They then have urban and suburban rental properties. So you can see they span end to end, really the entire home market. And whatever you're looking for in terms of property or living style, they can pretty much cater to that for you. So before we wrap up the video, I wanted to talk about a few other areas that I think are pretty exciting about this company. So we talked about their focus on land development and acquiring land at competitive prices. So you can see here they control over 63,000 home sites, and 43% of those are via options. So if you watched my introduction to options video, I actually used options on homes as an example in that video. And what this allows them to do is really leverage their investment and take advantage of properties if and when they feel ready to do so. So for example, they may know that certain area in the country or a certain community in a city is poised for some growth. So they take option contracts on land in that area, and if their thesis comes true and property values start to go up, they then exercise that option and start building in that area. However, if for whatever reason that doesn't come true or they find a better area to invest, they can actually back out and they don't lose all their capital that they would have originally if they had purchased that property. So they're now also considered one of the largest developers of land in the United States, and they have their own in-house engineering company, which we talked about in one of the initial slides. And finally, you can see all their land deals are approved at the corporate headquarters by senior management, so that executive level has hands-on visibility into every single deal that they make. So the last thing I wanted to talk about is actually Toll Brothers manufacturing division. So they actually distribute and build everything from the initial lumber packages, trusses, all the way down to the doors and windows for a lot of their homes. In 2020, they supplied the components for just about 3,000 of the homes they built, which is phenomenal. And as you can imagine, when you're building it in-house, you can really control the timeline and the quality of the products that you're delivering, not to mention reduce the cost because you're vertically integrated, and reduce the dependence on labor. So you don't have those same situations where maybe contractors or builders can fluctuate and overprice or underdeliver, because you're controlling that within your own operation. So to close out the video, I wanted to just give you guys a heads up on their next earnings release or conference call, which is scheduled to take place later in February on the 24th. Now, I think this is a company, as mentioned, that has a lot of macro tailwinds behind them and is poised for some massive growth over the next 5-10 years. After doing this research, this is definitely one that I'm going to add to my buy list. I think this company is in really good position. I love what they're doing. Management seems to be pulling all the right triggers and executing at a very high level. And I'm extremely bullish on Toll Brothers as a whole. So hopefully you enjoyed this video, you guys. Hopefully this gives you some visibility into an industry or company that maybe you haven't heard of before. If you haven't already, please remember to like this video and subscribe to the channel, and make sure you have a great rest of your day.